Greetings, folks. Hedley Widdop here from Lion Selection Group to run through the highlights of the July quarter, period ended 31 July 2020 for Lion and its portfolio, but also to talk about some recent developments in the mining space, which would be of interest to our shareholders and our friends. This presentation will be made available on our website and encourage you to go and download that for yourself. You can grab these slides if you wish and also have a read of that disclaimer. One of my colleagues has spent a lot of time on that. He'd certainly appreciate that if you did, but very important piece of information for you to consider. Main points I'm going to touch on, Parney Joint Venture has had something of a quarter. There's been a revaluation of Lion's interest in the joint venture, which is to incorporate the effect of gold price change from the last time the valuation was cast to now. There has been, of course, a very significant deal announced in December last year to combine our joint venture, which is over a 1 kilometre wide, 1 kilometre block with the surrounding ground. And when that closes, this valuation will be reassessed at that point again. So it's on positive watch, if you like, for what that means for the value. And so far, none of the new information has been incorporated in that assessment. Nusantara has also had a very busy quarter, re-releasing a large amount of information on its AWEC Mas project to reflect the change in gold price over the period of time since that was put out. They're now working towards debt funding of a long life, eminently debt fundable and high margin gold project in Indonesia as well. Erdene Resources in Mongolia has made a great deal of progress coming up with a first pass bankable feasibility study. No reassessment of that one required, and has also turned up some pretty exciting exploration information, not only within the project, which is being considered for mining, but also from a nearby prospect, and has been quite successful in raising money in the resurgent Canadian market. And then we'll finish off by talking a bit about what's been going on with the gold price, how that's affected liquidity coming into the mining space, particularly for explorers and junior resource companies, and the consequence that that has had on the Lion clock and our read of the cycle. So starting with Parney, the Parney Gold Project located on the northern limb of the Indonesian island of Sulawesi. And for quite some time, Lion has been involved one way or another with the Parney IUP, which is a 1 kilometre wide, 1 kilometre block, shown in this white square just left of centre on the map. In December last year, we announced that along with our partners, Merdeka, had done a deal with the surrounding J Resources, an Indonesian listed gold company, who had the contract of work. So it combines the larger contract of work with the IUP into one greater joint venture. That deal hasn't yet closed. We're just waiting for that to happen. But that would produce a very significant combination of ownership, which probably enables this for the very first time for the project to be considered for development under one ownership structure, which was a huge leap forward. Zooming in on the project, there's a couple of established resources there. The blue dotted line shows the IUP that Lion has been associated with for some time, and the resource, which was established by One Asia in 2014, is that shape just in the middle and top of the IUP. J Resources separately estimated its own resource just outside the western boundary of the IUP a little bit more recently. And if you put those two together, there's about, well, there's 2.4 plus 2.3 million ounces estimated there at a little bit less than a gram. So quite an exciting prospect to be joining the two of those together. But it's more important than just what it looks like to join those two blobs. Topography is tremendously important in this part of the world, and I'm going to show you a cross section in just a moment, which comes east-west right across the middle there, just to show how influential topography is in the value which is locked up in these two resources, and how the combination of the ground will bring about a major realisation of value. Drilling has been taken place in the area linking these two resources. This link zone had been very poorly drilled, despite these pink shapes coming quite close together. This area here has required drilling for some time, and with the joint venture deal having been signed, even if not closed, it provided the confidence to go and examine that area in a bit more detail, with the encouragement of some historic results. So we already had a fair idea of what it was we were looking for in the middle there, and that drilling has been carried out by our partner, Merdeka. until quite recently. The drilling has been paused, and the reason for that is that the greater joint venture deal has not yet been closed, and we anticipate that once that deal does close, a more aggressive drilling campaign can kick off to infill that area and parts of the other resources. But it's worth noting that whilst these two resources have been separately estimated, there is mineralisation in the area which is more broad than just those, and the drilling hasn't yet successfully closed off those resources, particularly in principal directions, wide open to the south. So there's quite a bit of work there to understand just what the potential of the project area is. If we cut a cross-section across east-west, across the middle of that, this is the real topography that you see going from one side to the other. So to walk it, it's real mountain goat country. If I superimpose the 1 by 1 kilometre lease which Lion's been involved with for a while, you can see we own, or owned, I should say, before the deal to expand the joint venture was announced, essentially most of the mountain. And if you put in there the resource, which was estimated by One Asia in 2014, part of the problem that One Asia had was that in order to mine a pit, you end up scalloping off the side of the hillside. The location of the top of the hill with relation to the boundary had caused, the challenge was mining an effective pit shape that could take out as much as that when you couldn't go outside the boundary with a pit shape. J Resources on their side had exactly the same problem. So for the two of these resources to be brought under one ownership means that a pit shape can much more effectively take out a great deal more, if not all, of the resources which have been estimated there. And figuring out which direction it could be extended in, it will also be important. But in this case, you can see that just bringing those two together crystallises quite a bit of value which wouldn't ordinarily have been extracted. The area in the middle, particularly on this cross-section, is wide open and begs the question, what would be in between the two and do they connect? Well, this link zone has a historic hole in it. In fact, there's a couple of holes in that area which were drilled in the 1980s, the best result being 406 metres at 0.5 gram of gold. So we've got fair confidence that that area is mineralised, and drilling was required in order to test that a little bit more rigorously, particularly now that that area could potentially fall within a pit rather than being on the margins of something which butts up against the boundary. This is the cross-section which comes directly out of our quarterly and shows a little bit more about which resources are where, and there's information about each of those resources tabulated at the end of this presentation. But it's important to say that what we now have, verging on 5 million ounces, spread over a vertical distance of about 400 metres, is fairly close to 11 or 12,000 ounces per vertical metre, which is an extraordinarily high measure on that metric. This is looking like it could be world-class size and shape, and it's very early in the piece to understand just how big this might be. But we do know that we've got our hands on what is a very, very exciting gold project in Indonesia there. And with the deal taking place to pull these together under one ownership, it just means that it could be much more strategically exploited as time goes on. So we're very excited for what can come from the drilling when we're able to restart that after the closure of the joint venture deal. What we said to the market in late July and has been repeated in the quarterly is what's happened to the value of Pani in RNTA. Now, this is a joint venture, so there's no ongoing market price for us to be able to reference, and nor has there been a recent transaction, which would be one way of showing the value for this in Lion's net tangible asset backing. On the left, we've got a bit of a valuation history of what this has been in RNTA. So when Lion established its joint venture interest by purchasing the Pani project interest from One Asia in 2018, that transaction took place for $15.4 million of Lion stock at that time, but that established the valuation in Lion's NTA for the joint venture interest. In late 2018, our partner Medeka purchased its interest of Pani from Provident, and that revalued Pani on the basis of that transaction to close to $40 million. So there was an uplift from that. There hasn't been a transaction since, but there's been a tremendous movement in the gold price and a near-on doubling of the peers that are used to provide something of a reckoner of what Pani might be worth were it in a listed company. So that's brought about an adjustment in the valuation of Pani within the Lion NTA. What I would point out is that there are several value steps which will take place over time, which would bring about a revaluation of Pani. And on what we know at the moment, we expect that would be a positive adjustment to the value. I can't tell you exactly how much that's going to be. It will depend on many things at the time. Once the JV deal is closed, it's anticipated the value will be reassessed again. And of course, there will at some stage be an economic study that falls off of the back of a resource, which will provide a value which is far more transparent than a peer-based comparison. What we've got on the far right of this chart is if you take broker research, which has been conducted over our partner, Medeka, and look at the valuation which is put on Pani in those reports, and then work out what Lion's 20% interest in the combined project would be worth, going on the basis that the brokers are valuing Medeka's 40% interest, you can put some numbers on the chart that show an approximate difference between what we've revalued it to at $60.7 million and what the look-through value would be based on those broker estimates. So there's still daylight between the two and considerable uplift to occur as some of those stages that I was just talking about take place. It's also well worth noting that those broker reports were dated February and March, I think, and there's been several $100s of gold price appreciation that have taken place in the interim as well. So it's quite possible that those chart lines on the right have changed for the positive since. Moving on from Pani, Nusantara, which is the next biggest piece of our NTA, has had a huge quarter. Brief history of the project at Awak Mas. It was discovered in the 90s. Nusantara was listed in 2017 on ASX. Its partner Indika invested in Nusantara in 2018, and the original DFS was produced. Last year, Indika, our partner, invested in the project, so they now own company and project equity. And more recently, in this past quarter, Nusantara has released a number of updates of the previous estimates, reflecting in many cases an uplift in the gold price, but also the work that they've been doing. So just within the quarter, there's a reserve update which has taken this project to being well within the territory of being a long life project. It's got 1.5 million ounces in reserve. The estimates which have been done to update the DFS indicate that the first 4 years can be well in excess of 120,000 ounces per annum. So that makes it a very attractive project, not only from an investment point of view, but from a debt funding point of view. This project looks like it can generate significant cash flows within the first few years, which has consequences for payback. But being a long life project also is appealing to bankers from the point of view of risk management. They get a lot of confidence, you would expect, from having a long mine life to be able to cover what they might feel that they're able to lend to the project in the first instance. So the DFS financials which were produced were estimated using a gold price of US $1,700 an ounce. There's been quite considerable change since then. So the table at the bottom of this page is the sensitivity table from the most recent DFS addendum that Nusantara produced, and it shows what the project NPV is in US dollars according to what your view of the gold price might be, and you can see what the post-tax IRR would be as well in the payoff period. Very, very attractive project from the point of view of investment and banking. So this company is now working towards obtaining debt, and off the back of that, it's going to be able to consider its final investment decision. And we're working towards that, so it's going to be an exciting close to the year for Nusantara on that front as well. One thing about Nusantara, quite on top of the tremendous value which is contained within the project that's already defined, is that the project area, the contract of work which they're working on, has a number of instances of mineralisation well aside of the resource which has been included in the project assessment. And this cross section, which I'm showing you here, which cuts east-west roughly across the middle of the contract of work, incorporates the resource at Awak Mas and also the satellite pit at Salabulo. Until recently, as in the last couple of years, the trend between the two was considered to be barren on the basis that the rock type was thought to change in between the two. What we now know from work that Nusantara has done is that this mineralisation, which falls within the resource, continues to the east. and it opens up this corridor here as being potentially quite prospective. Now, that's all untested, and it's just an example of the prospectivity that exists on this prospect. So what we understand is that there are numerous occurrences of gold. There are trends which look like they could be reasonably significant in a geological sense. It looks to be a large mineralizing system. So on top of building this, the company has at least 16 years, according to their mine life estimates, to go about trying to understand how this might be turned into a larger project or extend the mine life by adding to resources. So that is something for them to contemplate once they get into production and are cash flow funded for that kind of activity, I imagine. But very exciting on a geological front. I thought I'd round off the Indonesian discussion by talking about the groups that we're working with in Indonesia. And this is something which we can't make too strong a point about, because we're very fortunate to have found ourselves with relationships with excellent quality partners, which if we'd been able to choose from any group within Indonesia, I think we probably would have landed on very close to these two, if not the exact same partners that we have. First of all, at Pani, we are in joint venture directly there with a company called Merdeka Copper and Gold. Merdeka have an enterprise value of going on $3 billion US. They're a multi-asset gold producer in Indonesia. They've got several operations in gold and copper within Indonesia. Extremely well connected and owned. A very strong company in their own right, but have made all of the set an extremely good example as to how you operate in Indonesia in the gold mining space, having developed, commissioned, permitted new mines within the last decade, and been very profitable in doing so, and working with some extremely high quality technical executives from that company as well. So Pani, with its world-class size and shape, has an ideal partner there in Merdeka, and we couldn't think of anyone better to be operating the assessment and the drilling which is going to take place there. And they've been extremely effective in working through the process of forging a deal with J Resources to bring together the larger contract of work into the joint venture there as well. On the Nusantara side, of course, Nusantara is ASX listed, and then Nusantara in turn has the Awak Mas project, which we've just been talking about. Nusantara's partner, Indika, is also extremely well credentialed in the mining space. They are a multi-asset Indonesian-focused company, which specialises in energy mining and mining services within the country. Enterprise value of going on $1.5 billion US, so also a very, very sizable company there. And both of these extremely well credentialed partners in terms of access to the right kinds of people that you want to work with on a mining front in Indonesia, as well as the kinds of people you need to turn to when you're going through permitting and banking within that part of the world. So both extremely well banked and have deep and long-term relationships within the finance circles of Indonesia. Whilst we're talking about Nusantara, during the quarter, Nusantara welcomed to the register Federation Mining, which doesn't have a tremendously high profile, but is probably moving in that direction. This is an unlisted mining enterprise founded by fairly well-known mining identities, Jim Askew and Mark Lemesurier, both who've got a fairly impressive background coming out of Evolution Mining. And Jim has an involvement across a number of mid-tier companies that have grown by agglomerating assets over the past decade or so. Joined on the board of Federation by Bob Vassie, who has recently come through St Barbara, so would be well known for a lot of people. So them as a shareholder holding about 13 or 14% of Nusantara, we're very pleased to welcome there, and think that's a great big tick for the project which Nusantara has and the work which they've been doing to see a shareholder like that appear. Just broadening the picture a little bit to the relationships on the Nusantara side. One of Indika's large majority-owned investments is a mining services company called Petrosea, who we expect to be very deeply involved in the project, final parts of the assessment, the front-end engineering and design, as well as probably carrying out various aspects of the actual mining or development that take place at Awak Mas. So on this page here, we have a picture of how you would like to do business in Indonesia in terms of forming partnerships. And Lion feels extremely pleased with the relationships which it's been able to forge here and bring to bear on the two main assets within the portfolio. Very different place to doing business in Western Australia, or a place similar to Western Australia, such as across the gold industry, which a lot of people are no doubt familiar with. And these are the kinds of friends which you definitely want to have in this part of the world in order to be able to go about the business of permitting and early development works, who have experience in it and considerably de-risk the proposition of investing all of this money in Indonesia to bring these assets to life. Moving on from Indonesia to Mongolia, the next largest investment in the portfolio is a company called Erdene. TSX listed, so a lot of Australians would be less familiar with this one. During the quarter, Erdene has announced a bankable feasibility study that shows a low capex proposition on a very high grade, shallow open pit gold mine in southern Mongolia. Almost $60 million US of capex to unlock a project which is very high margin at these gold prices, and the NPV and IRR figures are stunning at even US 1,800 an ounce. So by the time you get close to spot, they're even better than that. It's a lovely little project. For the first time, I think, in my career, I've seen what looks to be a new discovery taking place within a pit design and at bankable feasibility study stage. It looks as if it's a structure which cuts across the known mineralisation trends. So the reason it hasn't been spotted before is a slightly different orientation, and that's being drilled at the moment. One of the results which came from the most recent work on that was about a metre at 125 grams a tonne. So that's a very, very high grade structure which has been detected in an area which was classified either as low grade or waste and was going to come out anyway. So that's enriched that project, and it'll be interesting to see how that affects the NPV and IRR figures once it's incorporated within the mine design and better understood. Erdene's also working on a target very close to the design mine at a prospect called Dark Horse, and that looks to be the best on license target since the discovery of Bayankundi, which was discovered in 2015. So there's been considerable focus going into the assessment of the original discovery, and they're now in a position to be able to cast their eyes across the rest of the license and wonder about what else might be there in an area which has been very, very lightly touched as far as exploration science goes. Southern Mongolia is a very prospective place and hasn't seen a great deal of exploration till now. The company has also found itself in a position of being quite strongly funded, and this ties in with what I'll talk to shortly, the recovery of the Canadian market, a resurgence in the gold price which has drawn investors to the gold space, and Erdene recently put away a $20 million funding, of which Eric Sprott contributed $15 million of that. So it's a wonderful endorsement to see an investor of Eric Sprott's calibre to come on the register there. Lion's very pleased to be alongside him. Quick run through of the NTA then. I've talked about the top three things there, the Paine joint venture, the Nusantara Resources investment, and what's going on with Erdene. There's a few smaller ones below that. We don't tend to commentate on them in too much depth, and you can see that they hold quite a small value in comparison to the three that sit at the top of the table there. Well funded with almost $11 million of cash in Australian dollars at the end of the quarter. So to progress those investments, which I've just talked about, Lion is very well off for the moment there. And net tangible assets now verging on $100 million. Lion trading at the low 50 cents per share against an NTA of 66.5 at the end of July 2020. Just to round off on Lion and the portfolio then, the management team at Lion has been investing in a strategic fashion in the junior end of the mining market for 23 years now. Lion has been listed on ASX in various guises for that long, and there's a compounding total shareholder return of 8.4% per annum, which is above what you would have got if you were in the Small Resources Index accumulation index for the same period of time. So we're beating the index there, and the board of management eat our own cooking. We own almost 20% of the fund, so we're well alongside other shareholders there. With an investment in Lion, shareholders have an exposure to two very, very good quality gold projects in Indonesia. Paine, which has the size and shape of a world-class top-tier gold asset. Nusantara, which is a long-life, high-margin gold project, both with very exciting years to come, and at the part where we can see that the value within those projects is about to start being unlocked. well funded, as I said before. We've got first choice partners in Indonesia. They're exactly the groups that we would want to be working with in order to go through the tricky assessment, permitting and development stages of these. And Lion is extremely well leveraged to not only a re-rating through the delivery of those projects, but also to what might happen in gold, which is seeing a perfect storm of fundamentals. 87% of Lion's NTA is in gold at the moment. So extremely strong leverage to what is capturing the market's attention at the moment. I'm going to round off by talking for a little bit about what is going on in the mining sector. And I think the entree to that is to say that we're going through quite an unusual year. COVID-19, of course, has caused turmoil in the financial markets, which has put gold well within the spotlight. We're seeing all sorts of crazy stuff all over the world. The AFL Grand Finals leaving Victoria for the first time in its history. But the important things from a mining point of view are that gold has become something mainstream. It's talked about in the mainstream media and it's attracting interest from generalist investors. And the Canadian market, which is the biggest market in the world for liquidity for explorers, is rediscovering mining juniors and explorers. It's moving away from some of the distractions that it's had in previous years. Very difficult to capture 2020 in just one slide, but I'm going to try to. This is the ASX 100 Resources Index. So this is the big miners listed in Australia, 1st of January through until approximately now. And I'll add to that the ASX Gold Index. So you can see the first impression here is gold has performed quite nicely in that time, and gold equities have performed extremely well, outperforming the rest of the mining market in that period of time. In January, we sat there with the Lion clock sitting at approximately 9. I'm going to talk a bit more about the Lion clock when we get to the end of this presentation. But we were seeing moving from a recovery, moving into the boom, going to the part of the boom where money starts to filter down into juniors. We're really just seeing the early stages of that in January. We'd had a reasonable year in 2019 with exploration measures starting to tick up, M&A starting to tick up in the sector. And we've seen quite an interesting period of time since. We'll get to where the clock's finished up at. Late February, we saw COVID-19. It started as a disease in China and has spread to cover the world. And of course, world financial markets have responded to that. It's caused immense economic damage. And for that reason, there's been immense stimulus announced in many, many economies, which has had a negative effect on interest rates. Interest rates are one of the key things which drive gold fundamentals. So when interest rates go down, gold tends to perform quite strongly. And gold has had a phenomenal year so far, which has driven gold equities, as you can see on this chart. Following the initial crash of the COVID crash, which took place in February and March, there's been what looks to have been a fairly miraculous recovery. It's fair to say that in March and April, there was a fair bit of skepticism towards the strength and validity of that recovery. But I think it's fair to say that with stimulus coming into various parts of economies and that finding its way into the market, this recovery has stuck. So we find ourselves in a position now where at least a return to weaker equity markets is becoming less and less of a proposition on the basis that more people think this recovery has stuck. I'm not going to commit myself to what I think is going to happen in broader equity markets. That's a very difficult prediction to make at this stage. But suffice to say, if anyone was expecting a crash in March or April, it hasn't materialised. So in August, where do we sit, or September, where do we sit with regards to the Lion clock? We're going to get to that in just a short moment. First thing you've got to say about 2020, though, from the mining market point of view, is that gold has become a mainstream investment. Just to put some figures on this chart, which goes back to the start of 2019, and it's the gold price in US dollars through that period of time, you may be able to see that in mid-2019, gold had its performance over a 2.5 month period. So there was 2019 saw gold improve by $230 an ounce, but most of that was compact into sort of 2.5 months. In 2020, we've seen a much more steady appreciation, and the performance of gold in that time is sitting at the moment almost double what happened in 2019, and that's year to date, or to the end of July at least. To the peak price, gold was up at one stage $550 an ounce. So it has seen quite a bit of money finding its way into this space. And what that chart tells me is that there has been sporadic movements in gold in previous years, 2019 being a good example, but it's a much steadier appreciation in 2020 on the basis that money is coming to the gold market and being followed by other money, as opposed to just money swinging in for a bit and then having a pause, which tends to make me feel pretty excited about where gold could go to. It's dangerous to say what I think the number could be, but seeing money come into the space tells me that supply of gold from an investor's point of view is probably going to outstrip, is probably going to underfeed the demand which exists. There's going to be more money seeking the gold which is available rather than less, and we all know what that does to an asset price. I wouldn't mind talking about liquidity though and funding, and the great example of this comes from Canada. I said earlier, Canada is the largest market for mining equities in the world, and it regularly raises more money than any other equity market for miners. And it's a two-tiered market. The TSX is the large cap market in Canada, and the TSXV, the venture exchange, is where the smaller companies are. So if you're classified as a miner on the TSXV, there's a very good chance that you're an explorer. And there's a hell of a lot of those which are gold explorers. Now in 2019, I'm showing you the line, which is the year to date in each case, funds raised by miners on TSXV. And it comes to a total of just under 2.2 billion Canadian dollars raised in 2019. It was an impressive number. That was an improvement on 2018. But what we said, and that was against the backdrop of gold putting on about $230 an ounce, which is what I was talking about on the last slide. Now, that was not a bad tailwind, and it's what had procured, I would say, quite a bit of the improvement on that market, because, as I said before, quite a few of these companies are gold companies. One thing which was significant about 2019 was that it seemed to be the last year where there was any investor interest in Canada in medicinal cannabis. Now, anyone who's not been following this space might not realise quite how significant this is, but in the years 2016, 17 and 18, fresh equity raisings in Canada by cannabis companies really did cannibalise the amount of money which was available for exploration companies to try and raise. And that market has cooled significantly. The medicinal cannabis market is quite new in Canada. It was a legalisation which produced the opportunity for a new market to emerge, and quite a few of the versatile entrepreneurs swung themselves towards raising money for that kind of thing in Canada. Now, with that ebbing and flowing, the money which would go into those kinds of risky things is looking for something new, and it looks as if metals, but gold in particular, has captured that attention. So in 2020, and this is to the end of July, that raising tally on TSXV is up 86% year on year. The tally is at about 1.7 billion Canadian, I should say, to the end of July. We've seen the month of August. I don't know what the figures are for that yet, but I would say that 2020 is well on track to eclipse and set another recent record for fundraising by junior companies in Canada. Of course, it's had a strong tailwind. Gold is up more significantly than it was in 2019. And what is also significant is that the money raised on TSXV is approximately the same as the money which has been raised on TSX for miners. So when those ratios are approximately the same, it shows that there is money coming into the junior space, because typically the juniors, the TSXV explorers, would be raising far smaller amounts of money than the perhaps much safer, larger cap at least, miners on TSX. So that's a big thing. For Canada to rediscover explorers and get over this cannabis fascination is a huge amount of money which can swing back to this space. And we've only seen a matter of months of this so far. From the lion clock point of view, what this means is that the clock has moved to 10 o'clock. Now, if this was moving at a steady pace and each hour development there only took the equivalent of an hour, we'd be getting close to the top. But I can tell you we're not. In previous cycles, the time from 10 through to midnight has lasted years. And from the point of view of anyone who invests in the junior resources space, what this tells us is we're coming to the most exciting time in the sector. This is when the juniors, the explorers, collectively perform. So this is where Lion invests. This is where we start to see the value of our investments really strongly unlocked. And we're looking to a number of years here where we have the opportunity to see our Parnies and our Nusantaras and our Erdines take great strides forward, particularly in developing their projects, but also in terms of unlocking the value, which I showed you some of the NPV numbers for those before, is quite stunning. It's worth just finishing off on the discussion of the market and talking about what behaviours we're seeing from, let's say, a before and an after. In January, the market was providing a reasonable platform for juniors within the mining space. Investors were seeking some quality explorers and would happily back them, but it was more a case of rewarding discoveries rather than pricing potential, which is what we're seeing now. So a number of exploration companies which are really yet to fully show what it is that they might have their foot on are being quite richly valued by the market, which just tells you that there has been a huge adjustment in the risk appetite for that pool of money which is buying those things. There was a strong preference for safe jurisdictions. I think that wariness is diminishing now, and we're seeing money go into some of the harder countries. Africa has typically been a very large mining jurisdiction. There's been quite staggering amounts of money raised for exploration in African ventures recently, and I think that is very much a product of money wanting to move into slightly more risky jurisdictions in order to try and unlock value there, because they've seen it unlocked in places like Western Australia, Canada, Nevada, and the US. And exploration money could be selectively raised early this year, but come August, September, if you're looking for gold, it will be funded. This inability to raise money unless you are really quite a good story, or even if you were just having trouble sticking your head up, you could be a good story in January and still be being valued quite cheaply in the market and couldn't raise money off of a small market cap. In August, September, you've got a bigger market cap, and the ability to raise that money is coming to you from the market because there is money there willing to do it. So in January, we were at 9 o'clock, and now we find ourselves at 10 o'clock. Very exciting development for what's happened in the last, I would say, few months. This has happened very much within the quarter, which Lion is reporting on at the moment, and that's written up in more detail in our quarterly report, if anyone would like to go into a bit more detail on that. I'll finish just by extending an invitation. This is the first time that Lion has ever made a video presentation of its quarterly. We will do much more of this in the future, and welcome any feedback from shareholders or friends who would have any feedback on that. I encourage you to hit up our website, www.lionselection.com.au, or if you download this presentation, you can just click on that link and it'll take you to where you can subscribe for, register for updates, Lion announcements, future market briefings that we do, presentations which we make at conferences from time to time, and commentary which comes out of our office on gold and the mining market. Thank you very much for listening to the presentation. I really do hope to hear from as many of you in the future as you'd like to. You contact us via our website, and like I say, download some of what we've done in the past, and you can see the kinds of commentary which is available that comes out through our quarterlies in future.